Welcome to today's video technical update presented by CMS Forex. It is Friday, January 8th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Friday action kept the euro dollar in the same range, so we'll skip that pair. We'll follow up on the pound dollar, dollar Japanese yen, and the dollar Canadian dollar pair. And we'll wrap up with a look at the euro pound and the pound yen pairs. This video is being prepared at about 5:20 p.m. Eastern Time after the close of this week's trading. The pound dollar pair is approaching a very significant support area here, and there's a couple of ways it could do that. First, it could just continue the decline of this swing. You see a swing projection here goes to 1.57, which is the support area. So starting next week, it could just continue to decline. But looking at the 4-hour time frame, it looks like we may have a retracement first, bullish retracement first. That would complete a Gartley at 1.63. It's important for the market to break 1.6060 first in order for you to have that outlook, because at the moment it's still in a decline and it's still testing our resistance without breaking it. Okay. But if it does break it, then we might have a test of this 1.63, which is this intermediate term trend line. Next is the dollar yen pair. We see, just to follow up, pretty much this pair has rallied in the way we anticipated, hit the 93 area, and now has stalled. It has 2 days reversal, 2-day continuation, and now we'll see if there's another leg of reversal. We mentioned earlier that this first reversal may not be over. There may be another leg. So we'll see if there will be another leg. Looking at this 4-hour time frame, we see a completed bearish butterfly. And that's, if you zoom in here, you'll see that more clearly. You see this A, B, C, D, this butterfly here, which topped off at 93.60 area, and from there that's why there's some resistance there, and therefore there was this topping action with a bearish signal. So there is probably further short-term bearish action before we could rally past our 93 resistance. This support line may help that rally, but even if it breaks, it doesn't invalidate the bullish outlook just yet. It could break and continue to come down, maybe test the 90.80 area around here, and it would still be valid. It would just be a ranging mode, and if the market supports it, then a break of 93 is likely in the upcoming weeks. The dollar Canadian dollar pair is next. As we can see, the pair has been in a gradual decline since 2009, and it's pretty much in a sideways action now, although we still have the slight downslope resistance. So the market here is coming down to a very important support at between 1.02 and 1.03. So this shows, you see here, this retracement, and then also this swing projection 1, 2, or A, B, C, D, and that swing projection would bring it to the bottom of this support, while this at the moment we're already testing the top of our support zone. So a rally, some bullish signals here, and a break of this trend line may indicate a bullish outlook, and if that bullish outlook would have these targets here. This first target is based on the resistance of our intermediate term resistance, and this is a swing projection of this rally here, this first rally. Okay, looking at the 4-hour time frame, we see this decline, this 2 swings down to 1.03. See some bottoming action. This may actually, if it's able to rally past 1.0380, this would pretty much be a double bottom. It also has to break this trend line, as I mentioned, and if it does, we would have a first very conservative target. Well, this isn't really a target. This is where there would be some resistance in the near term, but after that, there are targets at 1.60, 1.06, or 1.057 to that, which is 61.8% retracement as of this decline and 100% of this. Also, you see this was an intermediate term target. So this is between the short-term target and its aggressive short-term target here at 1.0750. So back to the daily time frame, you see 1.06. Oh, excuse me. This is okay. 1.070. See, this area is basically, this whole area here is basically the aggressive short-term and just the conservative medium-term. Aggressive short term, but a conservative intermediate term target, and then this one is a longer intermediate term target at 1.095 or 1.1. You see, this is the resistance here. All right. Moving on to the euro pound pair, we are pretty much in a sideways action for a couple months now, and looking closer. We're basically, see, from this decline, we may be retracing all the way up to a 78.6% before more bearish pressure. So that's the daily time frame. We see the stochastic is bullish, although not that strong. The momentum is a little bit laborious, and you can see that with the price action too. But if the market continues the swing, it would complete a bearish butterfly, and there would be some resistance here, possible retest of 0.88 or 88.50. Looking at 4 hours, and that is a more detailed projection of the second leg. Again, it would go up to 0.90, 80, 0.91. So, and this would be 161.8 expanded retracement. Okay. So that's the short-term outlook for euro pound. Now let's move to the pound yen pair. Pound yen pair is bullish, just like the dollar yen pair, and it broke out from this narrow volatility, came back down to test this area, also this rising support, and it so far has held. So the market may continue to hit this, to rally and test the 153 area. Okay, looking at the 4-hour time frame, before that happens, we have a lot of bearish pressure in the short term. You see, we have a Gartley here, A, B, C, D, that came up to 61.8, 78.6% retracement area, and we have a candlestick combination that's a reversal combination, and we have a bearish divergence. So that's a very strong bearish indication. However, the market needs to break where it's closed the week right now at 148 to 148.50. See, this area is the former support, and if it breaks, then we probably would test this support, and we might find some bottoming action here. And if it does, a rally is suggested, and that rally may break 153. But also mind the manner of the rally, as that will help you assess the probability of whether this would break or not. If it's very strong, it may break, but even if it breaks after a strong rally, watch out for clearouts. If it's a strong breakout, try to wait for a retracement that establishes 153 as support before establishing your longer term bullish outlook. That wraps it up for today. Visit fxtimes.com for the rest of today's analysis. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you a great weekend.